Hello, everyone. We'll be starting in just a moment. Let's do a quick sound test before we start. Hello, everyone, and welcome to today's No FOMO Charts, Stocks and Crypto YouTube video. Today is Friday, January 9, 2026. It's about 10:30 p.m. Eastern Standard Time. Welcome, everyone. This is a swing trading and investing YouTube charts video and channel. I am live right now. If you want to say hi or have a chart request, let me know in the comments or the live chat box. This upcoming week, USA stock market earnings season begins. We have all the big bank stocks reporting earnings. JP Morgan, Bank of America, Wells Fargo, Citigroup. We also have Morgan Stanley, Goldman Sachs, BlackRock, State Street, also in there Delta Airlines and Taiwan Semiconductor. So big bank and financial week. Economic data, we have CPI, core CPI, new home sales, PPI, core PPI, retail sales, core retail sales, unemployment claims, manufacturing index. Some people might wonder, why do we even look at that? For me as a stock trader investor, this economic data definitely influences the Federal Reserve and if they're going to cut or hold interest rates for the next 3 to 6 months. They directly reference CPI, PPI, even some retail sales, unemployment. They always talk about that at the meeting, so very important. Recent news, CES Tech Conference concluded last week. USA stock market earnings season begins on January 13, Tuesday morning. Walmart will join the NASDAQ 100 next week. Interesting, great. AstraZeneca will exit that index. The World Economic Forum annual meetings began on Monday, January 19. USA job creation in 2025 slows to the weakest since 2020. And Meta signed multi-gigawatt nuclear deals for their AI data centers. AI going nuclear for energy. Let's start off with stock indexes. I'll try to streamline this video in terms of I'll just do trend lines, support, resistance, those numbers, and a couple indicators, and possibly multi-time frame just to make sure. So we'll start off on the weekly. SPY. Weekly chart, we actually have a green bullish engulfing candle. So we broke out above resistance, finally above 690. It's great. We're still uptrending on the weekly chart. This upper yellow line is our trend line resistance. Daily chart is still in golden cross mode, meaning it's still in uptrending mode. We're holding our 50 EMA very beautifully, and even the 20 EMA as well, the blue line. We are not at any extreme right now. Extreme would be 712 range relative to the past 100 days of trading. Although we just broke above the middle half line of 690, which is good. On the daily chart, we're actually seeing that cyan histogram momentum break bull again. That's good. And on the 4-hour chart, we held our 100 EMA. The 4-hour went from low Bollinger Band to the upper Bollinger Band, which is totally normal for trading. So no extreme technical warning sign on the daily chart for SPY. The only thing I would say is maybe that we're getting stuck at this resistance zone. Market should make a stronger move, probably coinciding with earnings. QQQ, NASDAQ, we're still inside of that symmetrical triangle. I'll redraw it on the top side and on the bottom side. A little bit of this breakout. We could adjust it as well, but I will interpret it as we just had a little bit of breakout. We were stuck until today for Friday. So we broke out above 628. If I actually measure this, I'll use a conservative measurement. I'll measure the middle. 4%. We should go to 647, assuming earnings are good. If earnings are terrible, then we can crash back down to 597. Those are the two levels. There's also intermediate resistance, 629 and 636. These are useful levels because it helps define risk reward. For example, if somebody used let's say, a $7.56 ATR, which I'll just round it to 2%. Then we could target 4% on the top side, which would be just above that range, 652. So the entry is probably lower at the breakout, like this. So it's useful, those numbers, because for me, it's very important to forecast the market instead of just reacting to every single price move that happens on the chart. I already know my support levels, I know my resistance levels. It's just a matter of, are we actually going to hit those? And for options, then there's the time component as well. Weekly chart resistance at 629. I like how the stochastic is more in the neutral range. We are still in the uptrend. I like this. We bounced off that 50 EMA. Technicals are mostly neutral. Intraday is a little bit more approaching resistance. A couple of days ago, we were in that low stochastic range. So algorithms love low stochastic, low momentum, low oversold ranges to build the momentum. Dow Jones finally broke out. Wonderful. Held that support of 480. Great. It's always nice to see a very strong bullish engulfing candle, piercing candle as well. Nothing extreme on the technicals for the weekly. Daily chart, I would say probably the hint last week was the hammer candle. If we crash back down to 50 EMA, I might still buy that. This hammer candle was the key, the spring to launch us off of the 20 EMA. And there was actually a bullish momentum. Maybe I did not call that last time, but there was hidden bullish momentum to push us up. Now, what I'm watching out for on Dow Jones is, when are we going to poke out of that extreme spot? Maybe we'll get 1 or 2 more days. Once we get extreme, there should be a small pullback happening somewhere in the 505 range, approximately. So we just have to remember the robots are just playing whatever algorithm or whatever strategy they're programmed to do. Humans, though, I would say, even including myself, sometimes I have a little bit too much bias, or the news hasn't happened yet, so I need more information on every day. We're in a good spot right now in the market. It could be worse. If we crash right into earnings, I mean, people would be not happy right now, although we're in the worst economic conditions for many decades right now, secretly, according to certain data. So let's look at IWM, and we'll lock this trend line here on the top. We just had that larger trend line breakout. I'm going to draw the support line, very steep, still in that golden cross. Last week, there was actually that double bottom on the stochastic RSI. So this is a case in point reason why I started using the stochastic RSI for many years now, because it helps me confirm intraday support levels so I don't have to dig too deep on a 15-minute, 5-minute, 1-hour, 4-hour chart. I can relatively tell if it's oversold on a stochastic RSI, probably the hourly or the 4-hour was oversold as well. So the 4-hour oversold, the 1-hour had multiple oversold. So the 4-hour oversold as well. So when I zoom out to a daily or a weekly, I can spot, oh, maybe we're going to have some bounce because it's hitting that oversold stochastic RSI range. And I often use the stochastic RSI to confirm my actual RSI, because a lot of RSI, regular RSI signals, it looks like it's just doing nothing in the middle of the indicator. But when I have a double bottom stochastic RSI with momentum on my MACD and my squeeze, and I'm finding price support above the 50, that's a greater than 50% chance bull bounce. Just want to make that clear to people. So now that that's passed, I am not thinking like that anymore. I'm looking at the candles. I'm looking at multiple time frames. IWM on the daily, I'm seeing that shooting star. If we happen to have a bearish candle opening on next Monday, Tuesday, we could get an evening star bearish pattern print, fake out, bring us back down to 250. So I'm very closely watching that, because the Stoch RSI hit that overbought range up here. But we can have something like this happen late November, December, small pullback. We're all still going to probably buy that, right? Small pullback. And if we don't crash, we're going to hold that support and try to get the next breakout. I'll try to speed up here. Remaining indexes. US oil, with all this geopolitical news, we're still in a death cross on USO ETF, but there was that momentum building on the squeeze. We hit that higher low, and then we had this 2-day gap up, hit that 200 EMA, pull back down. So now the support level on USO, $68 and $70. You need to hold that to try to continue an uptrend. Sometimes, however, USO hits the 200 and then just fails. But there's obviously changes to the geopolitical news and events. So this could actually be a potential turnaround spot. The weekly just death cross, so it's just so not convincing. But on the weekly, I do like the support level above 67.72. So we could have a W here. If it breaks out looking like 73, maybe 76. It takes time though. UNG. Remember last time I was saying I got out of that options trade on UNG at 15.15 and then it just completely crashed. UNG does not respond to technical strategies because I backtested a whole bunch of them myself. So it's all about supply, demand, news, and global events. So when it starts death crossing down or rejecting down EMAs, I'm not going to instantly buy that. Years ago, when I come back to UNG, I need to see upside down head and shoulders. I need to see actual price patterns. That seems to work in my experience. Double bottoms, upside down head and shoulders, or a clear uptrend, higher low, higher high, reversal, or a strong level support. When it just looks like one down leg, I learned from experience, I am not buying UNG unless something massive changes with the charts or the news. So I just want to point that out. The entire price is just angling down right now from a daily perspective. GLD actually had some intraday support bounce. And I want to make this clear that even though last week I said there is that bearish momentum forming, I am usually early to these trades, meaning I'm usually one of the first people that I know to say, oh, we're having bearish momentum because I can see the visual. Most people that are long-term traders and investors, they're not looking at this bearish divergence move, although I still think it exists because I see this double RSI and then that's not good. So if gold does not continue to break out above 417 and have a very, very strong rally in the next couple of weeks, might get it just a pullback. And I'll draw it. We could get a pullback. If it doesn't break out, we could pull back to 400 or 390, and that's totally normal. The stochastic RSI is on the lower side. So whenever stoch RSI gets low on a daily, and if it holds, there's sometimes that bounce. So right now we're in that medium spot. We could have one pullback, double top pullback down to 396 like this, and then maybe play that support bounce, possible scenario. Silver. People love silver, precious metals right now. So last week I did say the bearish momentum is forming, but it does not mean it's going to be the exact top in one day. It's forming. So even though the weekly's in high territory on the RSI, the daily chart is actually not super extreme. And if we use Bollinger Band linear regression, it's in the overbought zone, but probably it needs to get up to like 77 or even 80, just extreme for there to be even like a gap up shooting star for it to have a pullback. I'm just saying it's probably going to happen at some point, but the way the technicals look right now, the stochastic RSI is not up here. So I'm anticipating maybe small pullback and then try to get the rally going. All right, let's move to crypto and then I'll come back to stocks because I'm going really long on stocks. Thank you for watching. I appreciate the likes, the positive comments, the subscriptions, subscribe. This is all free information for right now for everybody. I want everyone, including myself and you, to succeed in trading and investing in our lives. Would be beautiful to succeed even more for 2026. AKA, someday we'll all retire from this. That's what I'm trying to say. Total, TOTAL, crypto market cap. Kind of a downer in terms of what happened this week. My interpretation is the AI news, the precious metal news, the geopolitical news, the earnings that's about to happen, the lack of crypto activity. Traders and investors are treating this as a pullback, but I still am not giving up on crypto because I've charted crypto, I've traded and invested crypto for so long that death cross does not mean game over for crypto. It just means we are downtrending. I would be much more nervous if the entire market crashed below 2.86 trillion nonstop like this. If it's just nonstop, every bounce is lower bearish. If it bounces like this and down, bounces like this, down. But it's bouncing and we're pulling back to support above 3 trillion. That's actually okay. It's actually okay. It's like a 3-2 retrace. Let me zoom in. This applies to Bitcoin as well, and almost every crypto that chart that looks like this. Even if we rally up and we pull back, we're still okay. Because in the 4-hour chart, it's golden up cross and we're holding that 200 EMA. So until we break below 3.02 trillion, I need to not panic personally. Don't get emotional. Don't flip my trades. Green, red. Don't lose money. Don't waste money. For me as a swing trader, this is not financial advice for myself. I'm just continuing to hold because in my personal experience and my personal trading habits, I have to hold through any potential pullbacks of the first pullback because if I got in such a decent spot down here, any pullback looks like it's going to be the end of the world for crypto. But if it holds the support level and it holds the support level after a pullback, that's actually what creates higher high and higher low and higher high uptrends. So I need to wait personally for this, if it's going to happen or not. I have risk defined. I'm not going to go too much into my trades, but I have defined risk. I just have to wait to see what's going to happen. And if it comes back to break even, that's totally fine for me because I'm trying to take a longer term swing trading view. I'm not scalping the market every 5 seconds. Bitcoin, BTC USD. Bitcoin, we had that death cross print on November 16, 2025. We're still in that downtrending price until recently we started consolidating to the side and starting to see signs of life of a potential uptrend. However, we have yet to hold support just above 89,700, basically 90,000. If we hold there for a significant amount of time, perhaps we can have a chance to rally to 96,000 or 100,000. But the stochastic needs to reset from my trading mindset. Stotch low to stotch high. So if it goes stotch low again, we could pull back, or just we can consolidate, the stotch pulls back, and then we finally get momentum to get the second leg up. Starting to lose momentum on the squeeze blue histogram, but on a weekly chart, we bounced above that 100 EMA. So that's why I'm trying to not panic on Bitcoin. Just keep, for me, I'm just trying to hold. Same thing with Total. The 4-hour 200 EMA is holding very nicely, actually, above 90,000. If this is real, this could be the start of the potential uptrend where I could be looking at it right now. So that's why, for me, I need to not keep changing my ideas. What will invalidate my idea is my bullish idea is if we lose 87, 85, and $84,000 Bitcoin. It has to crash that low for me to be wrong. It hasn't done that yet, so I'm still potentially right and correct in this trade, even though it's risky. But that's my style. Let's go to Ethereum. Very similar. ETHUSD still downtrending from October, November. In December, start to go sideways consolidation into January 2026, potential higher low. I like that we're holding above 3,000. My final number in the sand is 2,700. If we lose 2,700 Ethereum in the next 3 months, probably the uptrend is not happening. But I need to wait about 30 to 45 more days as a swing trader to get this intraday oversold to see if we get the next bounce or not to the upside. Weekly chart. There is risk here. Ethereum does not look perfect, because what could happen is if we crash to 2,600, which is the weekly EMA, then the trading oscillators will go deeper oversold down, and then maybe more people will buy down there. So I have a potential second buy down there if that happens, depending on the situation. XRP USD. On a daily, sometimes it's important to draw my trend lines first. So top to bottom. We can see where and why did we reject down. There's a resistance. So sometimes drawing 1 or 2 lines helps beautifully. This lower support zone, roughly, I'm just going to draw it there as well. And then the next major resistance, probably in this range as well. So call out the numbers. We bounced off of $1.75 support. We hit 240 resistance. This trend line, the angled trend line, pulled back down. That's a relative 50% retrace from the breakout. So it's not a perfect looking chart, but if we throw up some EMAs, we're holding nicely above $2. So that's my line in the sand I have personally for Ripple. $2. If we break down below that, then I'm gonna start to think, okay, we might not uptrend. I need to see maybe better hammer or a triple candle pattern, Morningstar pattern, to see if we can get the rally going. But it is death crossed. But sometimes, though, why this is different for me is we rejected below the 20 EMA for months, 3 months, and then finally we short squeezed everybody, had the big pullback. Now we're resting above the 50 EMA. So there's still a chance. If I get my day trading charts up, 4-hour golden cross, stochastic oversold, starting to build momentum. So maybe a couple more days before I might see some action either direction. Solana. Start clean, start simple. Draw my trend line I'll just use a parallel channel to make it easy. And then define the trend. Is it uptrending? Is it going basically sideways? Or is it downtrending? We're basically going sideways inside of a downtrending structure. So this one's a little bit more correlated with Bitcoin. We didn't see the XRP where it goes straight to the actual trend line. This is Solana copying Bitcoin. I do like that we're right above the 50 EMA, $135. So that hasn't happened quite like this probably since April 2025. And that was after a massive tariff crash. So that's why I still have hope for Solana that it's not the end of the world, even if it crashes negative 50, 60%. We did have negative 50%. That's why I entered, because I remember we've hit $250 Solana. So when it's 125, 120, that's 50% off Solana. Yes, I could be scared of this death cross, but a 50% off Solana with low oscillators and slight bullish momentum, I would say that's maybe 55, 60% chance I might see bullish continuation. That's just my estimate here. Trying to see if we can get to 160. My line in the sand is 120 for bottom support for my idea to be canceled. Let's pull up Zcash because I read Zcash news. Why did we have such a crash? I read on the TradingView news that their entire development team apparently quit, according to the news, reportedly, and that perhaps the CEO of Zcash might be starting his own different company. That's what I read. So that's why there is such a crash here. Also, I didn't buy Zcash on purpose and didn't show it last week because it was at a high point. So for bulls, high point of the price, high stochastic RSI, meaning overbought, just kind of too high. If we only use price trend lines, it was at the top side of that rising wedge. And then once the support line does not hold, then I know there's a problem with the crypto or the stock. You can see here that support held, support held, support held. Usually when it gets to 4, 5, 6 times, sometimes it just fails. So I'm hands off on Zcash for now because that fundamentally is pretty bad news to me. So let's just put up a Fibonacci level, and maybe if Zcash gets to 378, 288, 181, it's background noise, weather's going crazy right now, 115, or even way down here, $50. We need to reset on Zcash. Watch out for if this is lower high weekly, 3-6 months, it could keep going down because if there's nothing holding it up fundamentally and people don't want it anymore, beware of the shorts. Let's do one more. Dogecoin, our old meme coin. When the price is really choppy like this, when it looks kind of a lot of up and a lot of down, a lot of up and down, I just put up a Fibonacci. Where's the beginning? Where it was, maybe we can do the highest high of 2021, or we could do the 2024 high as well. Recently, I'll just play this 2022 support level because there's multiple touch points there that makes more sense to me. And so we can see when we double bottom off of June 2025 price at 14 cents, key word there, double bottom, we have a nice bounce. We have a nice rally of 75%. So if I'm strict, if I don't see upside down head and shoulders price pattern, if I don't see double bottom, what do I see right now? I see a small rally. That's not one of my setups. Although one of my setups was finished in terms of the squeeze momentum. But until I see a much obvious pattern, sometimes it takes 3 months for a setup to occur. You could see March all the way to July. Sometimes July to November, sometimes 6 months, something like that, even a higher low. So a lot of these altcoins, the reason why I don't push it onto people every single stream, every single video, or every day on the social media is my strategy is I take a longer term view because I'm not trying to capture 0.5%, 1%, 5%. I'm trying to capture 50%, 100%. That's my style. I like swing trading or longer term investing so I could capture the whole move, not the whole move, but the majority of the move. I'm not, because in America, we don't have leverage trading crypto. So I can't do 10 times leverage, 50 times or 100 times leverage. That's why I'm not over trading. Also, I backtested a lot for many years. Longer term charts has higher success percent chance of win rate, which is why I always lean towards longer term, meaning daily, weekly, monthly. 4 hour can work, depends on what indicator I'm using and what strategy, but I hope that helps demystify altcoins. All right, I'm going to jump back to stocks now. I need to show my corrected and updated stock financials fundamentals template because last week I actually used a different one. So I fixed it and I need to present it again. So let's ignore the top here. I'm using Apple stock. I'm talking about the 3 bottom indicators. What is it? It's number 1. These are fundamental financial data indicators from TradingView for stock corporations only. Although the announcement I just saw is there's crypto fundamentals now. So now I have to investigate that and find the best fundamentals, which I'll probably do for next month. But the 3 numbers I'm using, diluted EPS, diluted earnings per share, fiscal quarter, total revenue, fiscal quarter, and net income, fiscal quarter. The 2 important ones, the 2 most important, diluted EPS and total revenue. Why? Because those are the 2 numbers that TradingView uses for their earnings and revenue numbers here. So let's just double check this live so I can prove it to people. If the earnings here reported is $1.85, it's hard to see, but right here, it's $1.85 rounded. This matches that number, the diluted EPS, top number. Then the revenue reported 102.47 billion. That matches this number, 102.466 billion. So these are the corrected fundamental financial numbers down here that we can use. Because sometimes if I only look at these tabs, there's nothing wrong with that. But if I actually open up the longer term trend of all those numbers, like diluted EPS for Apple, really easy to see what's going on here. Let me flip to, let's say, NVIDIA, right? We could see NVIDIA since 2023, January. So for 3 years straight, almost, rising EPS, going up. A couple quarters of negative, but that was tariff induced. That's the higher high, higher low pattern, right? The upstairs pattern that every investor wants to see for EPS. I'm on NVIDIA chart right now. For total revenue as well, nonstop uptrending revenue. Let's go to the net income, so their net profit essentially. The third number here, almost nonstop, but basically uptrend except for 1 quarter. Beautiful, right? This is why from those 3 basic financial numbers, NVIDIA is really one of the best companies. If I rewind, flip back to Apple, it's more cyclical, seasonal. Apple's not having nonstop growth every single 3 months, every single quarter. So it makes sense why Apple, there's other reasons too. For example, I mean, their AI products, their actual hardware products in terms of physical AI and the software side AI, aka Siri, has not worked out. Although I love Apple products, I don't want to speak too negatively about any company. I own Apple products. I've been using Apple products for decades. I love Apple. I'm just saying, when you compare companies, when you start comparing Apple to Google Google to Meta, Google to even Tesla, or even what is happening with certain social media with their AI. Apple is still the seasonal company on paper. Maybe they have something in the pipeline, but it makes sense why when I look at their daily chart, when it hits some kind of relative high and we get a head and shoulders, things are going to sell off. There's also that bearish news about the Apple Card switching banks. So for me, what I've learned, I'll just sum it up in charts, is that if I identify, let's say, a good or global well-known company, is I try to just buy the lower spots. And it's scary to do that because it starts downtrending. And if I bar replay this, we don't know, nobody knows if it's actually going to go up when the chart looks like this. I just rewound the chart to April 2025 and tariff crash. That was such a terrible time, but it's past now, right? Lower low, lower high, lower low, lower high, lower low, lower high. Okay, so we have this downtrend that printed on the charts. I remember saying on my stream that, yes, this is not the greatest situation, but I do remember on this, this week down here saying, well, if I buy here and I hold for 5 or 10 years, we should recover. And actually that mindset was correct. So as a trade, I was trading down here, but as an investor, I'm saying, well, this is a crash. It's like what Warren Buffett taught me through his books, is when there's a problem, global crisis, or a corporate mistake, not saying Apple made a mistake, but sometimes that happens, or a valuation mistake or something like that, and it starts crashing. The investor mindset is, well, can this company actually recover? Because if it could recover, this could be a buying spot for the top, let's say 10 or 20 companies. If we fast forward to the end, that was the exact bottom that we're looking at right here. Exact bottom. So then what does that look like on the indicators, not the financial indicators, the technical indicators, let's say on like a weekly chart? It is oversold. That low stochastic, we had a W double bottom. If somebody wanted to be safe, wait for, let's say, June, July 2025, when a lot of companies upcrossed, and then we had a big squeeze. And then Apple itself upcrossed on August 2025 with the golden cross. So I just showed essentially 3 modalities of trading in terms of very aggressive value buying, potential momentum buying on technicals, and then the confirmed uptrend technical indicator, right? Or if so, there's a 4th modality, is if I missed all of that, then just play one of these dips over here, anticipating earnings on good companies only. This is not financial advice. These are 4 of my strategies that I'm just showing here. It's actually harder to find because it just requires patience, a lot of visual discipline. I have to check it a lot. So I'm not really playing every single technical indicator. A lot of this doesn't matter. You can kind of feel it and see it on the charts when you have a really low crash or prices holding. We're trying to reclaim that 50 EMA just like Bitcoin. That's why, from experience, is if we're not rejecting down on price and we're not going sideways, what's the third option that I can see? Forecast. Probably it's going to go up if it's not going sideways price, or actually not consistently going down. Right now, however, it is going down. So Apple has a significant problem, and I don't want to keep talking about Apple because I love Apple, but I'm just saying this is such an important global company and it's such an important chart that once we lose, this is more of a teaching moment, once we lose the support, we, like I said, bounce, 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 fail, then there's a problem. Let's go to the next company. Microsoft. Start off with the financials. Turn off all the indicators because sometimes it's a bad habit. We can roughly see they had very mostly strong EPS growth, mostly strong revenue and net income, maybe 1/4 of or 2/4 of flat or negative. In early 2022, growth is slowing down a little bit. And it makes sense. The price is also reaching some kind of relative high. So if I'm looking for value on Microsoft, I actually don't want to buy too much because it's in the middle zone of that trend line I just drew. Value zone would be something like 419, 400 to 410, somewhere down there. I don't like buying up here when I can draw a trend line because that's the actual resistance zone. And then I can confirm that with some technical indicators. Now that I know this is a pretty strong company with those 2 or 3 fundamental numbers, and I use Microsoft every day. And if I happen to get interested, let's say right after earnings or something, but it's too high for me, I learned I have to just discipline myself. No FOMO charts, just wait. Or pre-plan where I anticipate support to be, perhaps using volume profile, where I think levels of value are, for example, 408, 361, 324, 479, 500. Get those numbers out there and put my alerts up, and now I'm actually having some kind of general plan for buying stocks. I can also put my Fibonacci up. We just bounced off that 382 level, 468. So price does not equal value. That's what the best investors in this world taught me, especially Warren Buffett. Price does not actually reflect the value of the company. It's actually separate metric. To me, price actually shows popularity and sentiment. That's what price shows me a lot of times. Let's do a few more. NVIDIA. Love NVIDIA. I own 2 of their GPU graphics cards. I'm using one right now. This stream powered by NVIDIA GPU and AMD CPU. So NVIDIA, we're looking at daily chart right now. Instead of looking in the past too much, I just need to draw. I'm using a log scale so I can see better. Let's just use even 2020 as my low anchor for Fibonacci, just to see where are we. You can see we just bounced off that 236. If I put the Fibonacci closer to the tariff crash, April 2025 up to October 2025, so it's 1 year, we're hitting that 382 level. I still think there's a potential slowing down here. I'm not going to call this head and shoulders because we have to have a neckline breakdown below 171 here. And then earnings and fundamentals has to be bad, but they just had a decent CES news. There's mixed reaction to that. But on the charts, if I just keep staring at it, I'm seeing some kind of head and shoulders pattern with a potential neckline breakdown. If that happens, that would be pretty catastrophic. That would be negative 20%, which would be really bad for NVIDIA. But I don't think that's going to happen right away. We're probably going to pull back down to reset the stochastic RSI. Just a little bit of pullback, probably to like 180 or 176 area. And then we're going to fight there. Volume is a little bit lower. NVIDIA earnings on February 25. So about 1.5 months away. So there's a lot of time to move around. We already showed some of the earnings. Again, this is not the full financials, but in terms of just those baseline numbers, that's always quoted in for earnings, EPS on revenue. Mostly nonstop, but if we combine that with the news, they have new products, but what I'm observing on the news is that I believe that probably the next revolution in AI is going to be physical product AI. So physical AI, we've had generative AI like ChatGPT. There's Grok. There's also Copilot, and there's Gemini, and there's Perplexity for generative AI and chatbots. But I would like to see a world of physical AI. I'm ready for the robots if they work well. This on a side note that for AI, we have to, yes, there's generative AI products. Yes, there's a lot of free and paid products for AI. And yes, there are AI data centers that unfortunately is eating up 40% of the RAM supply in the world, which is driving prices of RAM, graphics cards, even SSDs, all storage. We saw that announcement from NVIDIA CEO last week about that storage is going to be big. And so we saw SanDisk and Seagate and one of the other chip companies rally and then kind of fizzle out. Because it all makes sense to me. If you built a PC, you know, all those components, I was talking to my colleague, the same components are basically being used up for AI, not the exact same, but you need a GPU, graphics card, you need a CPU, brain chip, you need RAM, memory, you need a motherboard, basically tie it all together, connect it all together. You need a power supply, energy, you need hard drives, SSDs, and NVMe drives, and probably need cooling, you need fans, you need liquid cooling, you need a case for your PC, right? So all of those, or half of those major components, price is just going to keep increasing probably. But I'm saying I'm ready for the next generation. I'm ready for robots. I'm ready for self-driving autonomous cars and taxis. So I'm talking about Waymo, their self-driving announcement from NVIDIA. I would love to see Uber. I'm sorry to all Uber drivers, Lyft drivers, DoorDash drivers, Uber Eats drivers like humans. But I'm thinking probably in 5 to 10 or even 20 years, all of that I think is going to be automated AI robots, AI cars, taxis. I would love to see that. I would also love to see products that physical AI robots in the house. So we get robot assistants in the house. And then eventually, AI robot chef and cook in my kitchen. I've already seen some of that where there's like a AI cook inside of a glass box. It's like 2 giant robot arms just flailing around, cooking correctly. I think it's like a Chinese restaurant starting to use that or something. I saw that. I would like to have that in my house. AI robot cooking me steaks and with like 6 arms. Oh my gosh, I'm ready for that. I'm ready for Waymo in my neighborhood. I don't want to drive around anymore, right? I love Tesla cars. I'm just saying, I'm just brainstorming right now because we have to just get out of this mindset of, or at least I have to get out of this mindset of AI equals GPUs. It's not like that anymore. In the beginning it was, but now it's bigger than that. So AI in every part of my computer. But I'm ready for the AI robots. If it's basically AI robots, that's the same price as NVIDIA GPU, so $1,000 or less, I would buy one. I'm definitely going to buy one if it's good. All right, that's a huge aside, but sometimes I just have to sit down and brainstorm, let my mind think of ideas. So then, therefore, what's the next investment? So I'm a little late to the memory chip investment. I'll just pull it up on the chart. SanDisk. Even though I buy SanDisk every single year, look at this. I'm late to that, right? SanDisk golden crossed way back here in August 2025. What about Seagate? Seagate hard drives using in my entire life, basically. We had a golden cross on Seagate June 2025, right? So SanDisk, Seagate, right here. There's also Samsung, SK Hynix, Micron. But whenever it hits the 50 EMA, that's basically a touch-up buy spot for me. But we had the crash after that announcement news, large pullback, and it's just because the price is just too high right now. If we look on fundamental indicators, it's actually showing me bearish weekly warning sign of this going up, price going up, and then momentum coming down. Momentum on MACD coming down. The only good thing is that the stochastic RSI is in the lower side. But what I'm trying to capture and do a better job of for me on weekly charts is not chasing too hard on the top side. Is if I was high IQ play, high IQ would have been this. Oh, Seagate, hard drive, is needed for PCs and possibly AI companies or data centers, I'm seeing a huge bullish divergence here right in the middle, beginning of 2025. So I should have auto-buyed there. So this is one company that I missed, Seagate and SanDisk. I'll be honest, I missed this one. I missed this trade. So we can also see here on SanDisk here, there's a higher low on weekly. And then when you have the breakout above 70, it's like RGTI or anything, you have breakout and it's breakout nonstop. So I'm not going to chase that too hard, although I do understand that these components are needed for AI data centers and PCs, but I want to see a pullback. Let's do some bar replay, and I'm going to end the trading here. Obviously, thank you for watching this video. And I just want to say, obviously, I'm not going to talk so much in future videos, but I'm just using portions of the live stream to talk about recent events, because sometimes it's bad to only look at price. It's bad to only look at like an indicator, because that's not the corporations. Corporations have products, services, financials, earnings, corporate executives, a management team, marketing team, distribution, supply chain, etc. Multiple locations, right? There's global distribution and shipping. So that's why it's not good to just look at one price candle and think that it's going to cover everything about SanDisk Corporation or any corporation. That's why it's good to just kind of stop talking about charts and just think about fundamentals for a minute or 20 minutes. Let's close out here with some bar replay. Let's go to something like RGTI, because RGTI was quantum. And quantum's actually faded since the October high. And I remember I actually played this down and I played this bounce. So what I want to point out to people is sometimes things are popular companies and sometimes they fade. They're not popular anymore. So for example, let's do example bar replay, trading, investing. I'll do trading and then an investment. I'll do a trade. For example, the last time I remember I saw a buy signal for me flashing in my system was about around September, October, RGTI. So let's pretend this is a quantum computing company, one of the more famous ones. Let's pretend in September I'm starting to analyze right here. I see, oh, it's uptrending, the price. So remember, trend. Is the price going up trending for consecutive higher highs, higher lows in the price? Or is it downtrending, higher lows and lower highs in the price? Excuse me. Lower lows and lower highs in the price? Basically going downstairs. Lower low, lower high, lower low, lower high. Or is it consolidating, going sideways in the price? Like this. Consolidating. Right now we're consolidating. But in September, it was about to start its uptrend. And from March to September, it was in a very slow uptrend, but it was slow and steady. Sometimes you go slow and steady with the uptrend. Sometimes you go volatile, rocket moon style up. And then sometimes you crash hard, satellite style, back down into the ocean. So how could I have played this as a lesson better? Just using price and volume, there's probably 50 indicators that's flashing buy signal, but this is what I do. Draw a symmetrical triangle, draw the resistance and support line and say, oh, wait a second, there's a sim triangle here. We could break out 50% to 100%. Notice that if I do 100% to the breakout, that's exactly where all the OCO take profit orders were, right there, before it pulled back and they had another leg up. But to plan that trade is once it starts breaking out, let's pretend, I remember it breaking out above 20. That was my alert. $20. Around, I'll just use today's ATR, but that's not the correct ATR, but let's say it's $2 ATR. So then I need to put at least a 10% stop loss, double the ATR to be safe. I need a 20% stop loss. So this is not really an all-in trade for me if I want disciplined risk management. The general rule of thumb that you'll see everywhere on the internet is 1% risk per trade. And what that generally means is 1% account risk per trade, and I calculate it. I'm not going to go into it because I usually over-explain that, but 1% per trade. So let's say if somebody has I'll just explain it. I don't want to give anyone misinformation. If somebody has a $10,000 account, 1% total risk would be $100 per trade risk. So this 20% would need to be, let's see, would need to be only $500. I'm just double checking is that correct? Only $500 entry. Because if it's 20% stop loss, then there's a $100 risk. And then I put my 50% to 100%. Let's just put it 50%. Take profit order. Or I could trail it 20%, trailing stop loss, but I'll make it simple. Put an OCO order, meaning if I buy here at $20, I have my partial take order or my full OCO take profit order here at $30, and then my stop loss here right at $15.75, a little more accurate, $15.50. And then just let it go. I mean, if I buy here, I just let it run up. And sometimes I have a mega rally. It was as simple as that. So if we actually rewind to the actual buy spot, let's say this candle, and then open the trading panel, replay trading, actually, it seems boring, but this is how to become a better trader, is paper trade and bar replay trade until I can prove I have 60, 70% win rate. Then ready to go as a trader. If somebody has 50% or less, then the metrics are telling me that strategy or whatever I'm doing is not working. So then as real money would fail, meaning bankrupt. So that's why bar replay and paper trading is the way to survive and thrive and learn. So pretend I bought this at 20, let's say 25. And we can see a trade value down here. Let's pretend I need to make that be $500 risk. That's the settings we had. Put that in. The buy limit, I think I need to probably I'll do a little higher because in bar replay it has to actually trigger for me. Okay, so we're in that trade now, and then I'll put my stop loss. I'll adjust this a little bit. Stop loss down to 18, and then take profit to 32.33. So I need to be accurate because I drew the box, and so those are my levels now. The box of risk reward green and red. Then I put my OCO order. My entry was where I bought, and then my stop loss. And then I also confirmed that here on the left side where I actually put my stop loss in. Make sure you have confirmed that and put my take profit and confirm. Actually, there's a new confirm or discard button, which is kind of strange. But it's going up and it's going up. So then I only have two choices to make. And there's a lot of fear and emotions. This is why I became no FOMO charts, is if I ever have fear and emotions, for me, I just move my stop loss up. Because why am I afraid? I'm afraid of losing profit. I'm afraid of not making money. I'm afraid of missing the trade. I'm afraid of failing or whatever, missing the price move or missing the rally, missing the boom. Although there's usually another chance. Is that if I bought here, at $22. I could just move my stop loss up to break even or higher if I'm trading. This is me just trading. So now I would say maybe I want to lock in at least $100. So then I'm going to move this up to $26.15. I usually trade a lot more than $100. I'm just using for example. So then now that I move that stop loss, this is a little more disciplined, a little more conservative, where I'm saying now, if the price goes down, I'm going to lock in $100 or 1 hour on this trade, no matter what happens. I'm not losing on this trade. And it's going up, so maybe I don't want to make it too close. But for example, let's pretend what happens, you just let it run up. Keeps going, hit the target. Let the market decide, or not the market, but the price action trigger what I decided in terms of my OCO take profit order, this green box. I decided that. And when I say let the market decide is, sometimes if I'm just staring at the computer screen and I'm thinking, should I buy or sell now if I'm in profit or loss, is humans are terrible at making decisions because we have emotions. Humans are terrible at that. That's what makes us human. We're emotional creatures. I studied this. The physical, what's happening physically is our brain and our ideas, the information that's coming into our body gets interpreted a certain way by the brain and then starts activating certain pathways like the amygdala or the prefrontal cortex, which can, in different people, trigger different emotions and brain pathways because of the plasticity of our brain and the habits, essentially. So in other words, if price goes up a lot, could trigger that greed emotion. And then what happens when people are greedy? Usually make the wrong decision or risk too much and like blow up accounts, go bankrupt. The reverse is true. If somebody has massive fear, then they're, as a trader, not going to do anything. Fear of success, fear of failure, fear of missing out, fear of the unknown. So then that's why I'm saying I lock in my stop loss or take profit and then just let the candle move around. And if it goes down, I still won in that trade. Maybe not the best risk to reward, but it's a decent habit in terms of, it's a good habit in terms of having no stop loss and then just waiting with my eyes closed and let this thing crash back down to nothing because this is a speculative company. Same thing with crypto or MJ stocks or penny stocks, or I don't trade penny stocks, by the way. So that's why just having that discipline of, let's rewind here and we're going to end here in the bar replay. Congratulations, successful trade. Oh, you could save your replay now. There's so many features, it just keeps changing. So identify the uptrend. Notice it's uptrending. It's not going downtrend. Okay, if it's downtrend, that's the most dangerous time to buy as a bull. I want to buy in an uptrending environment. That's not extreme. So it's uptrending, and this is a real company that has a lot of news that comes out on it. Once we had the resistance breakout, right, started consolidating after mixed earnings. But I remember that summer, June, July, August into fall is when things start to go berserk. August was the beginning of the open stock rally. It was incredible. Then quantums, somebody decided to go crazy on quantums because whatever news occurred, there was a technical breakout. This is textbook breakout. This is what it looks like. The price breaking out above a resistance level, increasing above average volume, increasing above average price. And that's when we know the breakout is real, when we have massive volume. And then just trail my stop loss. And then at some point, now somebody might be wondering, okay, what if I didn't have the 50%? Maybe I put 100% somewhere up here, which would be 60, which it actually did not hit the next target. How did I know to get out of the position? Well, there's actually candles here. Because we can see bullish engulfing, piercing, We go gap up, piercing, doji, shooting star, bullish engulfing, to bearish engulfing, to bullish piercing breakout. And then we have a hanging man candle. And then we have another hanging man candle. And then this is where I start to bring in something like Bollinger Band, because you can see it's sticking out the Bollinger Band, and the linear regression was way out of bounds. And then if I look down here, we're starting to lose momentum on my stochastic. It's going down. We're extremely high on the RSI. We finally have that bearish momentum double the lower low here. That's 1, 2, 3, 4, 5, 6 signals, including candles. Let's even check pivots. So I'm thorough here. Check the previous pivots. It was above Fibonacci resistance 3. So there were 6 signals at that time that the price was too high on RGTI, right at this spot, October 14, 15. This is also a few days, 4 days after the Bitcoin capitulation crash. That was October 10th. So you can see the correlations, right? So maybe 7 signals, including sentiment. And then I got out of there. For me, what I keep studying and practicing is I should have opened up a put position there, because if there were 7 signals, probably a put position was the correct thing to do. So I missed the short side of that trade. I captured the long side. I missed the short side of that trade. So personally, I need to try to improve that for myself this year. Again, this is not financial advice. The last half or 3/4 of the stream is more for sharing information, events, charts, and education. Thank you for watching this long video. I appreciate each and every one of my subscribers. Hope this helps somebody out there in the world, and it definitely helps me to review it. If you like this video live stream, go ahead and click subscribe, hit the like button, leave a nice positive content, share this video with your friends, and I hope you have a nice week. I'll see you in the next live stream. Thank you and goodbye.